Welcome to another Founder Wisdom Pod. We have Michal Majerczak with us today. He's founder and CEO at ActAware. This one's a founder finance podcast. We're gonna address a couple of financial questions here. This one is presented to you by podpair.com if you want to start or scale a podcast. Michal, welcome to the pods. Tell me a bit more about yourself and what you're up to nowadays.
Hey, thanks for having me. Nice to meet you, Charles, as well. That's very impromptu. I'm in this beautiful place here in San Francisco called Shack 15, with the view on I could show the bridge there, and it's a great co-working space. What I'm working here on ActAware, that's bringing AI, like everyone in San Francisco does, into impact space, into ESG metrics, environmental social governance space, and basically producing better data, giving maybe better PR to ESG, which was not recently didn't have a good maybe PR based on a lot of controversies. I'm coming before I started this company 2 years ago. I worked for over 15 years at Wall Street companies, mostly focusing on analytics, and part of those risk analytics, performance analytics, and ESG analytics. So that's my experience here. And oh, what's something? Shoot, there's more people coming behind me. Maybe I can move in a better. But I'm sorry for that. I'm just gonna switch. So this is what we're working on, and how can I explain answer the next question?
Yeah.
There you go.
How do
Sorry
you
about
how
that.
do you make money with ActAware? Tell us about the financial model here.
Sure. So the company is right now still pre-revenue, although we onboarding first clients. The model is B2B with the data, meaning we leveraging AI to create a data platform which consolidates all the metrics about the companies all across the world. So example could be, greenhouse gas emission, energy usage, water depletion, things of the same, like the in the social space, let's say, breakdowns by say woman to man ratio, unequal pay, equal pay, things of that kind, and governments, like who governs and how the governance is performed for each company, and who are our clients. These are mostly asset management firms that they construct either sustainable portfolios or socially aware, or also want to calculate exposure to certain risks that coming from either influencing climate the wrong way, and so on. So now we are relying on friends and family and our own funding, and we're building this. And also we have app for consumers where we bring the same data, so we democratize the access to this data to consumers, which can shop with their value. The app is called ActAware, and you can scan the barcodes of the products, and we use all this data to show how each company matches and aligns with what you care about. So that's in a nutshell.
So you sell this data to a financial company to prove that these other companies are ESG compliant and that they're good for the environment and the social good?
Absolutely, yes. So the financial companies, they use this data to determine who they want to invest and We're gonna divest, let's say.
Right. Did you raise money for that venture? And yeah, what does your revenue look like at this moment?
Yes, so we raised over 1 million to build it, and the revenue, the ARR, basically this year is expected to be over 50K, below 100K. So that's where we are right now.
And one subscription is a couple of thousands per month, or how does that work?
It's more intense of thousands in terms of clients, although usually it's a longer onboarding period. The size of contracts in that space, it depends on the size of the client as well, but it goes, into hundreds of thousands if you providing large amount of data analytics and so on. And to large clients, let's say to, biggest ETF producers and so on. We're not there yet, but that's the market. The total market right now for this data in this space, it's 1.5 billion, and it's still growing. So that's what we address.
And what is the alternative to subscribing to your platform if I'm this huge financial company and I want to rate a company on their ESG-ness? Like what alternatives do I have?
Oh, who else does it? It's main companies in the financial space. So whether it's Bloomberg, S&P, MSCI, Morningstar, and so on, and our basically premises that we can leverage right now much more AI language models to construct this data, to gather it, organize it, and we can make it more accessible, meaning we can create more impact. We can basically have more attractive price on what we offering and higher accuracy. So that's what we're.
Great. So your top goal this year, I would guess, focusing on growth and client acquisition. Are you raising another round or?
Yes, more mid-year. Well, okay, on the way, we're still getting angels stepping in. So just signed one 2 days ago. It's nice because it's extending the runway and it's not super dilutive, but we are preparing to get our seed round most likely around like June, July timeframe.
And who's in charge of product development?
So we have a team in Warsaw, Poland. CTO is there. Most of R&D is there. Of course, I'm in charge of everything, but they actually doing the work. My CFO is here with me. CMO is in Toronto, Canada. And the head of sales and growth is in Denver.
Right. And okay, so you've got growth, you're potentially raising. In terms of client acquisition, how does it work when you're pitching big banks? Is it cold email? Is it LinkedIn outreach? Is it ads? How long is the sales cycle? And yeah, how's the closing rate?
None of that. None of that. It's actually we spent 2 decades working in this industry, me and my co-founder. We have clients waiting for us to finish our product and deliver. I was just at Wall Street. Every time I'm showing up there, I was just at Chase Manhattan Plaza. It's just leveraging all the relationships we have, and so I could say that we can go and grow faster with maybe more funds as we can build up faster. The actual sales cycle, we're not worrying about it. it's something that people are finding us, and or they know what we're doing, and they looking for solutions in this space that are better and cost less. So and we also do like have a reputation in that space, personal reputation. So that's why I could soon down the line when you uh, establish your first clients and leverage all that, but that's maybe like 2025. Then you worry about how to reach the next level and engage those. Sales cycles are pretty long. Those are, can imagine those contracts are somebody already using somebody else. Those are annual or longer contracts. You really need to have a good offering. Those are very sticky solutions. There are challenges, but there are also I would say opportunities where you can provide something in a niche that is underserved or there's no great data solutions for it yet. And if you can deliver on it, then you become attractive.
Right. And what's your current burn rate?
So it's low since we still let's say I'm not paying myself. We have a team in Poland, and it's a team of let's say 10 full-time and basically on call like or part-time engineers and so on, depends what we need. But so that's around 35,000 a month.
Right. And you're not paying yourself. You worked on Wall Street for quite some time, so you have your savings there. And what's your plan? When do you want to actually start paying yourself?
Um, After the seed round, and the revenue start coming that is more significant, and yeah, right now I'm just paying for insurance for myself, yeah, and the family, and yes, I was able to save enough to put and start a company and then assure myself at least 3 years of commitment that I can survive, I would say. Also, I'm supported by my spouse, so we do have three children. My oldest daughter is already in college, so there are expenses, but it was all planned earlier, and we just going with this plan.
Right. And why shift from a well-paid career on Wall Street and go for foundership?
Great question. I keep asking myself that sometimes, that being a founder, it's not always the rainbows and unicorns. So many things. So I did spend time from 2006 to 2021. So that's 16 years almost working for financial companies, Wall Street, and it was a great time. It was a great career. It was very comfortable. Got to the point where, yeah, money was actually abundance, and it's a great feeling. But it's also it's when you realize that that's not everything. Yeah, yeah, and of course there was much more career ahead of me, and I could have stayed. And things are one way easier, one way maybe harder. But why? It's that the main thing I believed in, that I acquired so much knowledge, skills, and I have so much potential that I can leverage it much faster, doing it on my own. That if I'm at the moment 43, so let's say when I made up my mind I was 40, that's kind of defining moment, that I still have a lot of energy to do that. That my spouse started her business. She's a psychotherapist, and she can support me when through all the time earlier she was raising our children and studying and getting all her licenses and everything required and credentials. So we made a switch, and as you say, like I carried the backpack for over 15 years, and we didn't have a problem with that. So everything like aligned to make the decision, and also maybe personal story that I was thinking about executive MBA, and those cost between 100 and 200,000 or maybe more right now, and all the friends I had that graduated those programs from Wharton, Stanford, Berkeley here. One thing that was common after they finished it, they went and started their own businesses. So I figured instead of spending that money for the executive MBA, I'll put it on the side and I put it in my business, and that's what I've done. So and then there is a main motivation that there's quite urgency to climate and social issues and how things are, and me sitting on that side of seeing all the data and how it's used and what else can be done with it. I was super motivated to do it faster and have that impact and purpose, and it's very rewarding. It's I think that's why people follow me and invest money and work for this startup, because they see that too, and it's rewarding to work on it.
Right. Sounds like a decent move. Do you still have stocks or other sources of investment or cash flow nowadays?
I do. I do have some possible. I actually sold the property that was more like the Airbnb, but because for different reasons, but it was a market that it was worth it. I do have decent amount in crypto. I do have a decent amount uh, in my personal stocks, and I have still a 401k rolling. So yeah, it adds up to save probably I don't know, like between 1.5 to 2 million maybe, like everything, and we secure with where we live, where with low mortgage and a house and so on. So I'm in a good place. I'm able to, let's say, go back and don't overspend for a few years and build it, and for much larger payout later. And that's all, let's say, premeditated and visualized and just right now executed.
Is San Francisco costly?
Uh, to live in San Francisco, it is costly. We live in the suburbs. Also not cheap suburbs where the schools are good, but I would say it's not as costly. It's you can be frugal and you can like, let's say, even I mentioned to you earlier that this place I'm here, it's below $2,000, being a great place per year to work and have all the connections and meet people and investors.
What do you spend on nowadays? Do you invest in your health, your well-being?
Um, so good question. I spent time on investing in my health. I spent time on, move a little bit again, working out and, let's say, I spent, just money to have the basic coverage insurance and things like that. But definitely, just from pure perspective of working a lot, there is less spending on restaurants and nights outs and if you invest in your health, then you definitely drink less or completely stop consuming alcohol. So that's a good saving. Um, we still do decent amount of traveling. So I spend, let's say, on a ski pass and seasonal ski pass to ski every weekend. I spend on you know uh, going with like family trips or my wife me and my wife trips. So let's say we go to like Florida, Jamaica next month. We've been Hawaii last month. So it's it's still very conscious and fun and not overspending, but you know there needs to be a balance between just working and spending time with, especially if you have a family that's kind of stabilizing you.
Very cool. Business wise, what do you spend the most on? Is it ads? Is it HR and hiring humans?
Uh, I would say 95% it goes towards what you meant by HR hiring humans, so like human capital. Um, was a little bit spent on initially building some PR and marketing, but that's kind of like one-time spends and then just to establish some image and invest in it. And there otherwise right now it's to deliver MVP and then after fundraising it is more for marketing and what we were talking outreach and so on.
What are your financial goals in terms of net worth, let's say in 20, 30 years from now?
Oh, that far. But I'm not worrying anymore about like in terms of sort of being in survival mode. I would say this, and now I'm worrying about delivering on a mission. Yeah, that what we trying to accomplish, and from that, I'm positive that we'll turn it into financial gains. Whether this will be through acquisition, IPO, keep growing in a private space. There are, all those things are outlined and consider all these possibilities. But let's say I would say more in a space like 10 to 20 years, I do believe that there'll be multiple millions coming and making life very comfortable. I made myself uncomfortable right now to get there, but there's so many ways to keep growing. This interesting business we in, yeah, because we actually leveraging a lot of newest solutions and everything that's coming out here with the AI that can be applied to what we're doing, and it can be also pivot and start making basically creating revenue if from multiple venues or rounds. So that's the I can see all of that. Of course, we're focusing right now on the very first delivery, and that is going to keep growing. So I don't have a number. If you're asking for that, I don't have. This is like 10, 100 million, whatever. I don't. I just enjoy what I'm doing, and I'm lucky that people follow this cause and they want to do it as well. I'm happy if all my employees, I have over 50 friends, investors, and I'm happy they will benefit from all this effort. So that's a great motivation.
Love it. Well, thank you so much. Where can people find out more about you?
So what we do, it's you can download the app ActAware. That's it. They're available everywhere, almost every country, and it's just for free. We can just get more educated about companies' impact and on whatever you care about. Uh, LinkedIn is a great place to connect first. So yeah, I do have a Facebook, I think, and Instagram, but that's sometimes I'm there, sometimes I'm not. So LinkedIn is the best place.